Welcome, everyone. Let's do a sound check. Let me know if you can hear. Just got a few people on. Awesome, folks. Looking forward to today. Make sure you get all of your stocks and everything you want to go over. Yeah, I'm going to just go silent. So it looks like we got good sound. Everything's ready to go. So I'll be back in just a few minutes and we will kick the show off. I'm going to let the room fill up just a little bit more, folks. Just, let's do 2 minutes. We'll get going here. Hello, everyone. Bob Kendall here. We're getting ready to start the show. Appreciate everybody showing up. These are fun. Somebody I saw on the timeline want to know if I could do these Monday through Friday. Man, yeah, I wish I could, but I can't. But it's been fun. We're actually doing two. We do a wave tech training on Tuesday, and then on Wednesday we're doing these live streams, and they're a lot of fun. So I do have Jay on the line. He's out there. I see him just pinging everyone. So he's going to be watching the timeline for me, and ultimately I actually am going to call him on a headset just so he can tell me what's going on out there. So a lot going on. It's interesting watching the channel and the comments and things like that. Of course, you always have to have the trolls, right? And the trolls make us all better. And sometimes the trolls have good points. So I don't mind. I see some of you guys commenting about, don't worry about the haters, but they exist. That's all right. Most of those folks, especially when I switch positions, maybe they read I guess let's say this, a lot of folks will read the thumbnails and assume what that video says without listening to it. So even last night, and we're going to go through this in detail here in a few minutes, last night's video, market signals new highs, this not confirmed. So if you watch the video, there's several trigger points that have to happen to confirm the projections that are out there. My job, the way I see it, is to talk about the things that I'm seeing out of my work, and then tell you and walk you through the process of the confirmation, through the different elements that have to happen to confirm these things. A lot of folks like to make long-term projections, and I'm okay with that. I've done that plenty in the past. This channel is focused primarily on the shorter-term trading. The software that I've got out there is focused more on an intermediate term and in some cases even longer term. But for the most part, this channel is going to stay focused on the shorter term movements, 1 to 3 days, maybe a couple weeks out, and occasionally I'll talk about longer term aspects of the markets, which I have been focusing in on, and just bringing up this chart here. I think we'll start today looking at the long-term aspects of the market. And since we've got an update, those of you that are following the market grid, when I post those, I mentioned last night, there's brand new numbers out for the month of July. So first day of July, we get new numbers for the month. The weekly numbers that came out on Monday will continue throughout this week. This is a shortened week. We've only got one more day. And then the daily numbers are going to switch out every day and going to be updating. So I attempted a couple of videos ago to draw in what I thought these market grid lines would look like. And they basically are doing what I thought they would do on a monthly basis. Now, this is the futures on a monthly basis. And you can see the ranges that are coming in. The purple line and the orange line are the extremes. And then the lines in the middle the dots in the middle are the S1, S123, R123. So looking at a data window, this is what I started to discuss last night. There's a number of things that are likely to happen, likely meaning there's probabilities, and there's other things that will most likely happen to have a higher probability that we can look at. And so if we look at the grid here, on a monthly basis, 3180 is the minimum. I went through this in last night. I just want to review this and go into a little bit more detail than I do on the 14 minute video. So R1, 3180, R2 is 3280. And most likely what we're going to see this month is we may not ever see the S1, but S1, R2 is the most likely scenario for this month. So there's going to be some upside, and a 3280, if I go over to look at last month's high, 3220 was June's high. And I'm going to draw a couple of things in here because I want to get this context out there. So what I'm talking about here is this dot here, that's the 3280. It would be just above this high that's here. And the pattern, I mentioned before, I am a bar chart counter. I'm a bar counter. And that's the way I like just pure old-fashioned open, high, low, close bars. The candlesticks look pretty. I just don't like the candlesticks. I just more interested in the price movement. So I could use candlesticks, but it's a lot easier for me to read this. And when I started in the markets in 1979, we had a piece of paper and a pencil and a ruler. That's how we had to do everything old school manually. So but these bars give me the perspective. I guess I've been doing it. You can't teach the old dog new tricks. But I do like to use candlesticks when I want them to look pretty. But the bottom line is these numbers here, 3280, there's about a 60% probability we'll see 3280 or we'll see a new high over June right now, just based on a number of factors. And the PPMs are part of that. I've got this sort of in a way, but PPM 1 is over on the left-hand side. You'll see it at a plus 0.49. And those of you that just first time on the show, the PPM stand for price pressure momentum, and that tells us about the angle of attack. And anything over 0.25 is a trend, whether it's minus 0.25 or plus 0.25. You notice you'll notice that the ppm2 is 0.66 and 0.67 on ppm3. So all three, each one of these indicators that I'm talking about here track a moving average. Let me clear this out. So each one of these averages have this upslope or an angle of attack that I refer to them as very positive, suggesting that the probabilities of us, right now, the probabilities of staying above the 10-month moving average, which, interesting enough, is 3016, which is very similar to the 200-day moving average. The probabilities are right now we're trading between 0.49, 0.50 is a 6 out of 10 chance that we will stay above that. And even if we go below it, it will tell us that we're likely to bounce back above it. We're not going to be able to stay on this. Now we're looking at the long-term chart. We're looking at a monthly graph. And you'll notice that the market grid has come up substantially and has flattened off. And I'm going to draw in a pattern that I think is likely to unfold. I did this last week, but I want to keep this out in front of you folks, and I won't go too deep and hammering this point down, but I do think it's important to have this perspective as we go forward. As I've talked about, if we get up to this high level, then we're going to see, I believe we're going to see some kind of pattern in here, and this pattern could last a fair amount of time. And I think these indicators will, the grid will adjust to the price movement. So there's a couple things that are likely to happen this month, which is one, I said there's 60% probability that we're going to get to 3280. There's some trigger points here. So a close over 31.45, and this would be a cash close. We're 31.17 right now. Close above that will confirm the move to 32.80, and then we're going to need to get a close above 32.80, and then that will confirm the upward projections toward the higher end of this grid, toward 33.80 and 34.71. And I think with what's going on in the economy, we've got employment numbers coming out today. There's a bunch of adjustments. That's one of the things that we continue to see with these reports coming out. Now, the ADP report that came out today was good, but is not produced by the government. Maybe that's the accurate report. We'll see what they come up with tomorrow. But it looks like to me that the books are being somewhat cooked. They're putting a much better twist on just about every government report coming out. So one of the things I want to watch going forward is I want to focus on this ADP report. In the past, you would hear that the ADP report was not reflective of what is going on with the employment report that comes out, and this usually on Friday, but this time Thursday. So those things are usually not that closely related, and I'm trying to see over the next couple months to see if the ADP doesn't end up to be the better of the two. We'll have to see what comes out. So this is the long-term perspective. I don't see anything changing that from the standpoint of the indexes as far as that goes. Now, there's a lot of dynamics that are going to be going on with the database that we have. We have a 16,600 plus database that we watch, and the intermediate's currently around 41% bullish, and the short term is in the upper 70 percentile range. So everything's very bullish right now, and we're just not seeing any type of negative rotation at all. And most of, I laugh because most of the haters, it look like they're short the market and they're trying to fight this thing. There's an awful lot of people I know, and you go on the internet and you're going to hear a lot of people telling you that there's new lows coming. We're going to retest the lows, all that stuff, and that's probably not that likely when it comes. The only apprehension I have is Jim Cramer is bullish, I think, so that could be a problem. Anyway, let's go ahead and let's just go. We're going to back up to a weekly chart. We're going to stay with these futures, and I'm going to move on and talk about some other things that we need to talk about. But this weekly grid here on the futures is telling a similar story, that we're going to be range bound, at least we only have this session and tomorrow, and the upper end of this range of the grid range for this week is 3169 is R3, 3113 is interesting is R2, 3113 even. The high today has been 3113.50. So we definitely backed off of that. We got a nice reversal. I've talked to you folks about the market grid, and some people are asking the difference between the three different grids. One is for the week, one's for the day, one's for the month. This is for the week. So we just hit 3113, and whether we can get through that, my expectation is that we will get probably through that tomorrow. Will we hit 3169? Probably not. Yeah, so, all right. So you guys are getting the picture here, right? If we go down to the daily, you'll see, and we're still sticking with the futures here. Go down to the daily grid. Today's range R1 3108. Like I said, we just traded 13, so we traded through that. 3128 on this is also the next sequence of numbers. I don't think we're going to get much more out of today than what we've already seen, to be honest with you. I think we're pretty much there at the moment. So I don't see the range is reasonably established. Yesterday we saw a final last hour move that absolutely screamed into the close on the cash, and then we saw the futures back up. And last night in the futures was interesting. If you look at, I'll cover that right now. The low was 3062. There was 3052. 3072 was the low for a while. They printed down a lower low overnight after I finally got to bed. And so it traded between S1, S2, and now we've traded just above R1 on the daily. So we could have established this. We'll see how this thing goes out. My guess is it will go out stronger at the end of the day. Before I came on, I just want to talk a few minutes of fundamentals, and then about in 10 minutes, I want to go ahead and I'm going to start opening up some questions, and we'll just see where this thing goes. And, I see some of these folks talking about maybe 50 or 60,000 new coronaviruses a day. Is that... listen, none of us are doctors. No one knows what this stuff means. One of the things that I've noticed is that the death rate isn't spiking relative to the number of cases. And a lot of the cases are younger people, which seems to have a lesser effect on this thing. old people like me, it's pretty dangerous, or if you're compromised health-wise. So I don't know how to equate some random numbers that could come at us and try to put that into analysis. So we have to stick with the technicals. I see people on the channel tell me technicals don't work, but they do, even in this stuff. As crazy as this situation is, over the years, over the last 40 years, there's been some pretty crazy situations, and the technicals work, and sometimes the noise gets so loud that it doesn't work, but they always come back in. The markets seek that mean, and that Mikhail, on the market grid, I think the weekly, those are cash numbers, not the futures that you're looking at. That's why they're different. I just went through the futures, just so you know. Yeah, and I think just one last thing on this Corona thing. I mean, I don't know about you folks, but I'm sick of this stuff. I think we all are. We're sick of, being locked in and doing all kinds of stuff. But, there's a lot more testing than there used to be too. So the cases are easier to find. But we'll see. We'll see what comes out of that. But like I said, there's no way for any of us to put those numbers together and make a market decision about that. So anyway, let's move on. I'm going to go over to the other screens that I have here, and this is the daily cash. And we're starting to see this thing finally starting to accelerate. We're at 31.15 right now in the cash, high 31.23. I don't have the grid on here right now. I just want to look at the chart. One of the things that happens, whether it's the market grid or if it's a trend line, I like to look at just like a clean chart. I do like moving averages on it, but I like to look at a clean chart once in a while because it helps me to see the markets a little clearer and what the possibilities are. If you start drawing trend lines on things, those trend lines start to define your thought process. So I'm a little hesitant. You're never going to see me draw trend lines other than maybe talk about some possible formation or range. Other than that, I'm not a very big trend line fan, but I am a moving average fan, and the PPMs and everything that I use are based upon the combination of the PPMs, measuring the angle of attack on the moving averages, and then applying the probabilities for when they're going to be actually penetrated. So this clean chart here, you can see we have tested the 200-day moving average twice. We're starting to turn up. We're still not getting trend numbers on the short term on the cash. It's just not happening. And we need this to turn up. It's going to take that close over that 31.45 level that I've been talking about. Once we get a close above that, then the momentum will start to pick up, and you'll start the next move, which will be, this is right here. This right here is that on a cash basis, 32.33. I talked about 32.20 on the futures, so I don't want to, maybe I should just stick to one or the other. So the numbers are slightly different. There's a slight premium or discount to the futures to the cash right now. So 32.33 is this high right up here where I've got the cursor. That is going to be the key point. If that gets going, then we're going to see some objectives. I'm going to throw the Fibonacci numbers on here real quick. So now when we put the Fibonacci ratios up here, you'll see in the pop-up box over here, the high target is 34.32 is a minimum on this pattern here, but we're going to have to close over the 32.33 number to trigger that. So what we're looking at here is a minimum move, 34.32. The upward range, don't know how realistic, but 36.10, 37.20. I didn't mention these numbers on the video last night, but these are part of the pattern that's unfolding. Now, a lot of times when we get these big upward swings like this, you're lucky if you hit the first number, otherwise 34.32. The other numbers typically don't get hit, at least not right away. I could show you a lot of examples where we are getting those type of projections, and they might take several months to get to. So the fact that I put it out there doesn't mean it's going to happen at this very moment. So I think I've gotten through most everything, but this formation is key. If I go through the cash, and we're just going to go and look at the weekly right now, there are no projections on the weekly, but this pattern that's unfolding just under this 10 period moving average, 3,008.28 is the 10-week moving average. And last week, this number was 2980. And I discussed this, I remember on the video on, I think last Friday, that this was going to jump up to low 3,000. So we got 3,008. This week's low was 99 and change. It stayed there for about a minute, and we reversed. And now here we are at 3116, 116 handles higher. So that is a very significant point. You'll notice that PPM1 over here is turned up. PPM2 is still at a negative number, and that's been plaguing this market for a while. About 3 weeks ago, we actually got above the second derivative, and it pulled back in. But you can see PPM3 is turning up. So this market is telling us that there's a lot more to the upside. And I was talking with someone the other day, and one of my old mentors, one of the guys that a long time ago, used to always say, the market goes in the direction the way it will hurt the most people. And I would suspect that's up right now. I don't think you can probably start with Ray Dalio down, and most folks out there are pretty negative and telling everybody that we're going to reprint the lows and all that stuff. Just pure, this is my life's work. I started using these PPMs in 1984. So this has been my legacy. This has been what I've done for so many years. I don't know how to do anything else, so this is what I focus on. And the result of all this is telling me the probabilities are that we most likely will not see a new low in this pattern. In fact, the day that, going back to March, the day that we had the 11% up day, I declared, there's a video out there that I did, that I believe there was a price low that day. I didn't believe the trend low was in place yet, but the price low was in place. And what happened was this market just, you can see it on the screen, just kept recovering and kept rallying and kept going. And fortunately, because of the models and not an attitude or an opinion, we were able to capture some nice pieces of this pattern. And that's what it's all about. So this pattern we've set up here right now, to me, looks very bullish. And like I said, for the month of July, 3280s minimum. We could easily see that upper range. We easily see that upper range, 3374, 3459. That's very likely for the month of July. Downside is going to be limited to that cluster that I talked about last week at the 3,000, 2984, 3020, the 200-day, the 10-week, 10-month moving average. Everything's clustered together, and they all have substantial uptrends. So I think I've hammered this down. I just wanted to have the opportunity to go through a lot more detail in here. Yeah, so Brett, that depends on the model. We run 10,000 models, so we, as far as what's the ROI, maybe I'll show you some of these things. If you hang out, we'll go and bring up the portfolio expert models, and you can see what some of those things go. So someone's asking here, Al Marino, thanks for the question. It's like, what would happen to get your numbers to turn south? And that would take a close under this 3,000 level. It would have to close under those numbers. And unfortunately, or fortunately, whatever, the probabilities tell us that that's not likely to happen at the moment. Now, if we just stay sideways, let's say we trade 3280, we don't close above it, we just get kind of range bound for the next several weeks, then the momentum will start to bleed off, and then there will be some vulnerability to the downside. At the moment, all probabilities say, as I mentioned earlier, 40% probability to go below 3,000 and stay below there right now. We saw that test just the other day. Market bounced pretty decent, not a lot, but we're 31.16. The low was, as I mentioned on the cash, was 29.99. So we got a nice bounce. We're back above that number. All right, so let's see here. I wrote down a couple. Let's go ahead and start digging into stocks. I know that Tesla's high on the list. I saw a couple of names I wrote down early on, but let's go ahead and start digging into individual stocks. And if you have some questions about markets, we didn't really go through NASDAQ and some of those other things out there. I'm putting up a chart here, which I think is real quick. I just make a side comment here. This is a chart of the spread ratio between the small cap and the S&P. And this thing just can't get out of its own way. So I still think for the next big move in the market to happen, we're going to have to see the small caps come into play. And I don't think that's yet. It doesn't look like these. This is a weekly pattern. If I go over here, this paints the real picture. This is what the monthly looks like. It's actually making new lows. So we're not turning this market until we can get the smaller companies to come back alive and see some of the value style boxes come back in. We're going to have to see the small caps come back in. Right now, and we know this, everything's being driven by this large cap. Okay, so I just wanted to bring that up before we moved on. So let's go ahead to a screen where we can start going through some of this stuff. I think I'll just start with Tesla. That's such a popular name. It's interesting, as Tesla's up another 3%. You know, this thing is going to the moon. There's a couple objectives here that are interesting, and we've just exceeded the first objective, and this is a weekly graph that we're looking at. So you'll see that the first target was 1,108. The current price right now is 1,135. The next objective on this is 1,398 and 1576. Now it's going to be difficult to determine how close we'll get to these numbers, but in my mind, these things are all burned into my mind. But if you look at the PPMs on Tesla, I'm actually going to flash you over just so you can see this. You look at the PPMs on Tesla, and you look at the PPMs on the S&P, you're going to see an amazing difference. I'm going to flash this just for a second to S&P. They look very, very similar. Where we pull back on PPM1 into the first derivative, it's bouncing. PPM2 and 3 look the same. Back Going back to Tesla here. Now it's a little stronger on ppm1, but the patterns are just so similar. Let's go to the short term, because the longer term says minimum or the next objective is the target 2, which is 1398. So let's see if we can break this down on a shorter term basis and fine tune that objective just a little bit. So there's some Fibonacci projections here. Those projections right now are 1150, which we're just short of, 1243, and 1300. So that's a little more fine-tuned. We've got ppm1 at 1.20 positive, 1.13, and 0.96. So this is an extremely robust trend. We're getting a little bit extended, but not much. I'm going to do two more things with Tesla, because I know how heavily it's followed, is I'm going to go to back to the weekly. I'm going to put the market grid on there. So let's do that. So for today, on the daily, the market grid is giving us a top-end range of 1141, R3 1127, high so far 1137. So we're trading right at the extreme for the day today. And I just covered the objective. So if we go to the weekly, we'll look at the weekly grid just to see if there's some numbers around there that might be helpful. The weekly grid is just blowing through the thing. The high grid was 1061, we're 1160. So this week has just been a breakout week. So there's nothing there. We're going to go to the monthly just to see if there's anything there. And monthly is pretty insane looking chart. But monthly, we're looking at 1144 is R1. So if you just look, there's a clustering of numbers between 1130, 1140. So this is going to be major resistance up here. We're probably not likely to go further, but this is the month of July, and the R2 number, the next number up is 1216, 1287, and 1352. You know, this thing is on such a tear, it doesn't look like anything's going to get in its way. But these are very difficult patterns to trade. If you don't have a position here, pretty good place to get tagged. If you were to bring up our WaveTech tool right now, I'm sure it says markets in a parabolic move, could reverse at any moment based on these conditions. So these are very tough ways to be able to get involved with this. All right, let's. I covered gold. I mentioned a couple things. I just want to bring this up real quick. I did mention that we are bringing in roughly 100 cryptos into our WaveTech tool, and we're going to be able to build crypto portfolios for those who are going to use the portfolio manager. So it's going to be pretty exciting. We're going to work on building some quality crypto tools. Jason doesn't know that yet, but I'm sure he'll get tasked with that. And I think that's going to be exciting. I've had some stuff that I've run in the past on the cryptos, and they can be pretty interesting. So we're going to go through and see which models work the best, what cryptos trade the best with our modeling process. And there's some pretty good ones. All right. There's a stock that somebody's put out there. I'm not sure. Let's see here. Now, this wrong symbol. I think somebody said that TSX is gold. I don't know. That could be a Canadian symbol or something? I'm not sure. But let's just go to gold here real quick. Now gold's down 21, and it's interesting because everything was pointing to higher prices. This is right in the range where I was talking about last night, where you'd want to be a buyer down here. PPMs are actually on a big uptick, on a big downtick. This monthly. Let me get over to a daily. Hang with me. So we're trading down at that lower end of the range right now. We're looking at, this is exactly what I was talking about here. Low 1767, 1772. So this is the bottom end of that range where you want to buy. It's actually trading in this channel. We are seeing a bit of a rollover on PPM1, PPM2. There's so many people excited when you see a market go over a key number like 1800, like gold did. That actually brings in some selling, and we get some even number resistance. So there's still going to be some work here. And those of you, if you're familiar with Jim Ricketts, he's the major bull. Him and I would say Peter Schiff, he's got to be just tickled to death that gold's at 1800. He's only been waiting for this for 6 years, right? And so to all of their defenses, if they just keep saying buy gold, buy gold, buy gold, and I'm actually bullish on gold, and that's fine, but there's still a lot of resistance. And I talked about this in the last night's video. Is if we go to the weekly, we're just not getting the type of acceleration for a breakout here. And so what it tells us is that we're just not going to accelerate out of this range right now. We're going to do what I call the creepy crawler. We're going to crawl up these bands. You're looking at the volatility bands or the grid, and we're just going to work this upward channel. And it's more prevalent when we look at the daily charts. All right. Yeah, I don't think I can get any of the Toronto. I don't think I'm subscribed to any of the Canadian stuff there. Yeah, so let's see. I got a symbol here. I'm just going random, folks. Wow. Yeah, someone just, this is what is this? Workhorse Group. Don't know what these guys do. Let's go to daily. Yeah, let's put a model on this. And this is the kind of stuff. And, you know, if you folks know and watch some of these stocks. Yeah, somebody just pointed out that the FOMC meeting minutes came out. That was a big event. You can see what they pumped the market again. But I'm going to put a model on this. And those of you, if you're using a WaveTech tool or considering it, when I put a model on here, you'll see these are classic patterns. And we're just, let's say you have a list of stocks and you have stocks that you're watching, maybe you know what this is doing and you're bullish in this stock, you're just looking for a place to buy this. You can see right here at $3.46 is where this model bought this. There's a couple buys here. It bought at $2, sold at $2.54, then rebought at $3.46 on a breakout, and now you get this crazy action. And typically, what's going to happen here? You can see that I've got the market grid here. We're going to see a range set up. These moving averages are going to quickly catch up with the market action, and this will probably set up a wave 4 pattern, maybe another high in this stock. Let me put the Fibonacci's up there and just see if there's any type of, there's not going to be a price range projection here, not on the daily, but we'll go to weekly. Yeah, it's actually got on there. Let's just go to a weekly. Yeah, there's nothing out there. The weekly's just about the same. Here's a weekly buy at 285 back on 5/8. And this would be a tough one if you owned it, if you owned it down here at $3, $2, it'd be a tough one not to blow out of and just let this thing settle back in. All right, let's keep going. Let's do shop. Another one, we got a buy over here on 417. We all know about this stock. Let's go to daily here real quick. So we got a buy, we got a sell, now we got another buy. We actually are looking like if we close above the market grid today, typically what you'll get is a 2 to 3 day sideways to downward bias. You'll move back toward the bottom end of this range, which would suggest right now that you would move from last price 994, you'd move back to probably somewhere around 940, 929 in this pattern. That would be, and these channels is where you want to trade these channels. You want to buy the bottom end of the channels. Now I contrasted a few weeks ago, I did a video on the difference between Bollinger Bands and the market grid. And the market grid is a price volatility calculation where you're looking at a standard deviation calculation in the Bollinger Bands, and you get those weird bubbles that flow around it, stuff like that. And they're useful because there's things that you can do with that. But what this market grid does is define really tight ranges so you can trade into, and the only rule that happens is when you do close above the extreme, you're going to see typically there's about a 60% probability that market will flatten out and trade down toward the bottom side of the band before it reverses and go up. When you've got these kind of numbers here, like on a shop here, on Shopify, you've got 1.97 positive ppm over on the left, ppm 2, 1.25 and 0.98. This is like extremely robust trend. So this channel, you can trade this channel. So if you had no trade going on here, you could actually trade the channel. Of course, you gotta know what the channel is, right? And I'm working at, so I saw somebody ask what the timeline is on TradeStation. I'm hoping sometime next week. There's a number of things that we have to do to get the TradeStation stuff out, and I'll stay with the stocks and take a look at these. I see somebody's asking about Beyond, BND. I don't know if you guys taste that stuff, but it's shit. I'm sorry. I got some breakfast sausage. I thought, well, I'll try this. It was terrible. I don't know what. It tasted like a chemical to me. Anyway, but yeah. So this stock has been obviously a big mover. We had a buy signal back here, and then exited. Another buy up here, and then an exit. So it's getting a little choppy. The PPMs are all negative. PPM 1 negative trend. So there's going to be some downward pressure, just like I was talking about. We're going to trade within this grid here. If we go over to the weekly, we can see if there's any underlying trends here that are bigger. The stock doesn't have a lot of data. Yeah, so this is pretty classic. So this, what I would tell you about Beyond is you're gonna be stuck in a range 120 to 150. So you'll be able to trade this stock. I wouldn't be getting too bullish longer term on this. And right now, like I said, there's a lot of negative, but you do have there's not very much data here, but you do have the PPM 1 at 2.42, and that's 134. So we're trading right on major support. So probably 134, maybe 155. There's a trading parameter there for you. That's about all I'm going to be able to come up with on this one. Here's another high flyer. Hasn't been around a long time. This is Fastly. Let me go to a daily. Yeah, daily models picked up the breakout and are still long. This looks like probably some kind of wave four. Maybe there's one more move to the upside here. But we're looking at maybe another 3 to 5 days of sideways action, 76 downside, upside around 92, 93, which would be retesting the highs. 89 was a high, so we could see a slightly new high out of this pattern. But this is more likely going to stay above this 10 period moving average. So this is stuff that you folks do have access to. The 10 period moving average is 70.92 right now. And it is rising. Yeah, it's actually 76.84. It's rising about $2 per day right now. So it's going to be 78. So that's going to be the point where you're going to be able to trade off of this. I would still stick to the long side just because of these crazy PPM numbers and the amount of activity that's going to be flowing because of this upward slope that we're in and the angle of attack. Yeah, SPY I would say is all that analysis would be relative to what I did on the S&P. I went through quite a bit of that. Let's take a look at lift here. Lift isn't lifting. You know, the Lyft, and I saw Uber. Maybe we'll do Uber as well. But all of these stocks, we've traded up to the 200-day moving average. All of these transportation stocks, whether we go through the airlines, we look at BA, we look at all stocks like Uber and Lyft, and all of these stocks, they're just going to hit up to this 200-day moving average. That's probably going to be the ceiling right now. And most likely, these are going to be pretty boring stocks. So these are probably ones that you want to do some sort of if you're an option trader, you want to just do a call, or you just want to put a spread around this thing. Sell some calls, sell some puts, and collect the money they want to give you. That's how the stock looks here on a weekly basis. We'll just do a quick look. Weekly basis, same thing. This is just a dog stock. We're crossing through first derivative here. It's flat, minus 258 on the PPM2. There's not a lot of data on this one, but it looks pretty negative. Okay. Paylocity. This is a weekly. Let me go to daily here real quick. Yeah, so Paylocity, we have a buy in here. There's a lot of noise around this. We went above the 200-day moving average. We're seeing some acceleration on PPMs. They're all very positive. Once again, the upward targets for this thing, 158 to 180, 158.47, 171.92, and 180.24 upward projection. The key number on the downside is going to be the bottom side of this grid below 139. So you could probably play this with a pretty tight stop. So here's Peloton. Not a lot of trades. We've actually traded into the range of expectation. If you look over where I've got my cursor right now on 612, there was 3 objectives rendered at 53.40, 57.41, and 59.89. And you see at this high, we went to 58.43. And that looks like that was pretty much moving into that high target range, 57.41, 59.89 high right there. There's a 60 print. Is that right? Yeah. Yeah, 60 print. So we went right to that high target there. This thing's going to consolidate. PPMs are still real positive. So the underlying trend, it looks pretty good. There's no objectives above this level. So this is going to be a tough one to figure out. I guess if they keep closing these gyms in Arizona here, they close the gym, and I guess you're going to want to buy a Peloton. And who was it? Somebody bought the mirror. I don't remember who did it now. I saw the newsline talk about it. But, you know, all of these at-home exercise things are probably going to continue to be very positive. Okay. Yeah, here's a COVID stock, right? mRNA. They had this is actually, I'm glad whoever asked that this is a good one. Derek, this is a good one, because one of the things that I talked about a few minutes ago, when we got this close above the grid line, we gapped above the stay where this thing peaked out. You notice that close, the next 3 sessions was lower. Matter of fact, it continued to move down for about 5 or 6 sessions. And this is pretty typical. Now there's still some upward projections here. Whether they'll come into play, we had a long trade come in, it exited. So the next buy signal, if we don't go below, this magic number is going to be 56.72. If we don't go below that number, we're likely to move at least give it a shot at moving up to this 88 level over some time. Excuse me. So this can be a good trade. You're just gonna, this is obviously, this is a vaccine trade. So, and just about, I saw somebody mention it's true, just about everybody is trying to do it. I won't be surprised if Ford Motors tries to come up with a vaccine. Anyway, so here we go. We're putting Exxon on. Another one of these stocks, man. I'm telling you, transportation, crude oil. We'll go through crude oil after this. This will be a good leap to crude oil. Yeah, just Enrico, I did the S&P 500 for almost the first half hour, so watch that rebroadcast. You'll get a lot of information there. Yeah, so this stock is just not going anywhere. There's a key pivot, 50.21. A move above that would be bullish, and then tell us there'd be a retest of the 200-day moving average. And I would tell you and you will realize, and follow me on the channel, I would just simply run the model, the WaveTech models, to find out the next trade on this and use that as an entry. And I'm just telling you, being able to have a list of stocks that you're following and applying it into that tool is going to be just amazing for finding both short and intermediate term. And yes, Dubs dude, we did do your stock. We did that. WKHS, we did do that one. Yeah, and it was Lookamon. That's right. Thanks, Kim. Yeah, we got to do Twitter, right? Another dog hovering around the 200-day moving average. We've had a couple decent buy and sell signals. Now we're getting into the noise. We got negative PPMs, PPM 1 and 2. So we're in a minor downtrend. 200 days going to be resistance. I don't see any trades here. Maybe a put or something. You know, there's another platform I've been seeing stories of, Parlor, I think it's called. A lot of folks are going over to as well. So I think people are getting tired of Twitter. But you know, I actually like Twitter. If you use it for the right purposes, it's a great platform. So yeah, I don't think there's anything. I'll flash to the weekly real quick just so we can get a feel for this. Yeah, there's just nothing here. 200-week moving average, probably support. We're looking at 28.14. Let's go from this to Facebook. Facebook's got a little better pattern on a weekly. It's fading, but it looks very similar. There's a lot of stocks that look similar to the S&P 500, and we're getting these big spikes in ppm1. It's pulling back into the first and second derivatives, and ppm2 is accelerating. So this is a pretty good looking stock, actually, longer term. If we look at the daily, we're going to see we don't have a trade on it right now, and we're really in this sideways range. So the grid's going to define this at 240 to 213 from that viewpoint. Okay. Somebody asked about Newmont Mining. Got a nice trade going here. All right, so we got a trade here at 57.81, 59. There's some minor objectives here: 60, 71, 63, 59, 65, 38 are three objectives. So there's probably not a big trade here, but certainly that would be the targets, and we're pretty close to the first target at 60, 71. We're within $1. And one of the things we need to do one day on one of these is really talk about, pick a stock and maybe go through some trading techniques and some ways to handle some of these things if you're just trading single stocks. And we did a big reveal yesterday on the WaveTech money management tool. And when you start to manage a pool of stocks or a pool of symbols, whatever they are, they could be ETFs or mutual funds, but for the better part, looking at a pool of symbols, there's a lot different dynamics and considerations to go. And Georgie, we did Tesla. I'm not sure, it was probably about 45 minutes into the rebroadcast, you'll find that. Yeah, let's do Disney. That's a good one. Another one of these, I put Disney into the debacle of travel stocks, you know, hotels, everything. I was just talking to my brother, actually, and we were talking about the carnage that is going on in the commercial real estate area. And the CMSs have a 10% default rate right now. And that is a really big number. And so all the retails, retail businesses, hotels, all these different folks, including restaurants in there, there's been a lot of failures out there. So while the tech market has driven the market and the stock market's acting well, there is a lot of carnage out in the economies. And I'm sure just about anybody on this Anyone on this call today knows and have seen the carnage around their neighborhoods. And it's just amazing. So, all right, I'm just looking at the timeline here. INO. Yeah, this is another vaccine stock. You see the daily, this is still hanging in here, but we spiked from what? $15 to $33, so it doubled. I'm going to bring in some perspective here. In 1992, I was on the Pacific Options Exchange as a trader, and the biotech boom was going on. And there's just a rule of thumb here. If you had bought this stock, you got lucky to own it down before this thing exploded. You always want to be selling into these patterns. So if you get a double, you got to take something off the table. The old rule just on options trading, if you buy some options and they double, you sell half, and then you can play with the rest of the money and you can start putting strategies and think about it. The first goal of every trade in my book is that you want to eliminate risk. So the beauty is now, because fractional shares are coming to market in a larger way. I know Charles Schwab announced, obviously, if you're with Robinhood has them, but what you can do is you can sell parts of your trade now. It's just a phenomenal strategy. So I need to do a video on strategies, on how to handle strategies and how to use from a trading viewpoint, not just the price viewpoint, what we've been talking about on these live streams. So I need to do that. I'm actually making a note to myself here to do that, because that would be a pretty amazing thing to have. Let's do here's DT. Somebody asked for this. The stock was good. It's pretty much stalled out. Let me take a quick look at the weekly. I don't see a lot here. I don't see a long or a short here. We're looking at, it's going to be like, this is very similar to what's happened with a lot of stocks. We get in this square box grid, I call it, and you're just going to work this grid. So there's going to be some trading opportunities, and that trading opportunities are going to be extreme, up around 44 to 46 selling, buying at 38 to 35, and you're probably going to get an opportunity to work this. Now, this is a weekly graph, so this is probably a good place to trade off of. I just put this ALT. This is autoimmune. Looks kind of a flat line. Let me just get this on a daily. Maybe we can, there we go. Yeah, so last trade on WaveTech was at 5.5. At 308. And it exited over here, no current trade. Sold it at 647, gave up a little bit. Once again, but these type of trades, if you get in at 308, this thing spiked up at $10. I mean, you just got to sell into that. There's no way to get around that. You just got to sell into it. Alrighty, see what else we got out there. Now, Netflix was not covered. Let's do Netflix. Netflix is having one of those days where it's breaking out of the range, and that tells us that we've got a pretty good chance of a 2 to 3 day sideways to down, maybe move back toward the bottom end of the range. We're at 480 right now. We'd be looking at a move back into that range, probably just down to 459. It's trying to break out here. We have PPMs 0.71, 0.57, 0.32. So if you're joining this broadcast, the PPM stand for price pressure momentum, and anything over a 0.25 or greater is a trend. So we've got a very robust trend here. So the sideways, it'll be more like a sideways move in Netflix, and we're continued. Let's go to a weekly graph just to get a better perspective of where the stock is. So we're trading in at the upper end of the ranges. Now there is some objectives which have been hit. We had price objectives, high target 431, 485. We actually got to 474, so we went between target 1 and 2. The extreme target right now, 518, that could continue. The PPMs are all positive weekly, so this is a big trend. The only thing I see when we get into this, what I call a square, where the flattens off with the market grid, that tells us that we're probably going to trade 2 to 3 weeks in a sideways range. Yeah, I just brought up ALT again. I saw your comment, Mikhail. Negative price on alt. Never saw a negative price. I'm showing $9.16, so not sure. Not sure there. Yeah, I think we did. Let's do Spotify. I couldn't live without it. So Spotify is a rocket ship. Let's go to a daily chart here real quick. The last trade on Spotify was a breakout over here at 225. We're seeing on a daily, we're seeing these PPMs starting to roll over. So this tells us we're going into sideways range. It looks like there could be one more high, and that becomes evident when we look at the weekly chart, which on the weekly grid, we're looking at last price 256, potential 275, 286 on this stock. Downside risk is, we go back to the daily, here's where you'd probably want to look at stopping out of this thing. Probably 243 is the extreme, but there is support right here at 248.80. So if you broke below that, which right now you got a PPM at 2.28, there's less than a 10% probability. So if you were looking for a trade, your 248.80 level would be an amazing place if they showed you that price to buy for a bounce, and that trade would be back to 261, maybe 265. So you could get a nice trade here. As far as owning it, if you didn't already own it, I wouldn't buy it up here other than a short-term trade. I wouldn't be looking to position. A lot of these stocks have run away, so those are something that you need to be aware of. Yeah, CMG, Chipotle. Had a really good trade here. Went long at 694, sold it at 996. Has no positions right now. And you're looking at PPMs are positive on PPM 1 and 3. PPM 2 is negative, is neutral. And so the most likely just going to climb the grid, which is the bottom end of the range is probably S3 1011 and R1 34 on the upside. That's pretty much all you're going to get out of this. But this is one that most of this stock is played out, and we're going to have to see some consolidation, a bunch of other things that go on before you're going to be able to buy this again. Yeah, I always forget this one. I don't know how, but Apple. This has been an amazing trade. Apple came on. Apple came on at 258 on 326, and it's still long throughout this whole run. Sometimes these trends just set up so good. I talked about this last week even. This 10 period moving average just been climbing. We spiked below a little bit on a closing basis. It just keeps staying above this thing. That number is 346.89 right now. We're at 358. And that appears to be the positive line there. PPM 1, 0.35, PPM 2, 0.56, PPM 3, 0.50. So very robust uptrend, very low probabilities of getting below these numbers. And 246 would be 246.89, around that level would be the bottom of this thing. Yeah, somebody asked if there's any suggestion at this point, like I did the airlines before. I haven't really seen. That was just such a unique opportunity. And that was at a different point in time. This is what I'm going to say about the market conditions and where we are right now. And I'm going to give you folks a warning. I'm going to have pretty much a hard stop here in about 10 minutes. I've got some other things that I have to get done today that I'm not going to be able to do a 3-hour show like we did last week. But I'll make sure I get through some of these last requests. But, from the standpoint of, sorry, I lost my train of thought. I got too far down that trail. But, the markets are going to, this is where I was going. The markets are going to be much harder from this point. They were easy when we were in the hole. If you figured out the rebound, which our models, I think there were almost 10,000 symbols that were profitable on our short-term models back in March and April. Now it's going to get very noisy. It's going to get much more difficult. All of this stuff we're seeing around COVID again, and cases, and the news that's circling around that, and everything that we're going to see, it's just gonna get hard. This is not, there's going to be some consolidation. What I was hoping for, and I still am, I talked about this and looking at let's just bring that up real quick. Hang on. Let's bring up the WaveTech tool here real quick, because I want to show you the database. And what we'll see, of course, I'm not logged in. Bear with me. So let's just look at the short-term database, and we're at 68% bullish. We're not getting any new traction on this rally right now, which is a little bit concerning, but I don't expect it to get very much traction from this point. Now, this database was 90% bullish about 2 weeks ago. Those are the things when we started to see a little correction coming in that I talked about. We were way overdone. I thought this database would move back to around 68 to 62% bullish. It's pretty much done that. The next rotation, if we get some positive rotation here, what we're going to see is we're not going to see a big expansion above 90%. We're only going to get to maybe 72, 74. So the traction for new buys in our database is going to get very, very limited. And then what will happen next, depending on where the prices go, let's just say, going back to my earlier comments, we do make it to 32.80. we get to 3280 and we see the market start to backfill, this database could get liquidated fairly heavy where a lot of these stocks are getting long. You can just look here at the indexes here, energy, financial, healthcare, services, and technology. If you notice that they typically hold on this short-term database between, on this particular set, 46 to 51. If you look at how many days of this trade it's been in, energy's been long 43 of 46. Now they could extend. There's no problem there, but this is what this is telling us. The last few sectors that are long are actually long in a tooth on a daily basis. So short-term basis, we've got some potential issues for this thing to possibly get up, and maybe what we end up with is, from an S&P viewpoint, a 3050, 3150 range. We still need that close I talked about earlier over the 3147 to get a breakout to get to 3280. So there's going to be a lot of dynamics that happen here. But just overall, my point here is that it's going to get much harder to trade these markets. It actually was easy to buy a lot of this cheap stock. Now things aren't cheap anymore. There's a lot of things that are overpriced. There's things that are fairly priced, and the next moves are going to be very, very, very interesting from the standpoint of the consolidation. Yeah, and Ram, I'm working on that manual. We're getting there. I'm trying to get about 2 hours a day in there. Shouldn't take. I'm hoping this long weekend I'll be able to get the bulk of that done. Okay. Yeah, I'm just looking through the timeline, folks, see what I missed. But yeah, I just wanted to talk about the database. So you're going to see a rotation. We should see a positive rotation if we get above 3147, move up to 3200 basis the S&P cash, and then we'll see a liquidation and a consolidation, and that's going to set up the next round and move. So there's going to be a lot of things to watch over the next several weeks. So stay tuned into the channel for sure. And I'm just looking here. I'm just going to ask you guys, if you're watching, you're enjoying this, smash that like button just to keep the YouTube guys happy with me. I appreciate it. Okay. So go back for a quick review to finish today's session and just look at what the S&P is doing. We got up to 3123. Let's bring up the market grid for today. I just want to look at that. The high 3123. We're right in between R1, R2. As I discussed last night, we didn't get anywhere close to S1, and I discussed this in a video last night that I thought we'd be worst case an S1, R2 kind of day, and that's pretty much what we're trading in. I'm not sure we're going to see, like I said earlier, we're going to see much ahead as we're about an hour off the final hour coming in here. So I think we've seen the best of what today has to offer. There might be a surge in this last hour. I had maybe some short covering ahead of the employment numbers that are coming out tomorrow, but I don't I don't see anything exciting here. And we'll walk into whatever the employment numbers come in, and I suspect with a little positive burst. I haven't obviously been doing the show, haven't had a chance to look at the FOMC minutes that came out, but there was a little bit of a pop, not a lot, but there was a pop off of those. So we'll see how it all plays out. You're looking. It's interesting though because we're continuing to see these small caps and mid caps really under pressure here, and I think that has a lot to do with what I talked about earlier and how the economy is structured right now. The smaller companies are the ones getting hammered. In the United States, the big companies, they're fine. They're getting through this. The small companies, independent companies, the core of America is still getting hammered. And I just kind of a quick review of some of the things I said several months ago, as we still at this moment in time don't know what we're dealing with. We know that there's amazing amount of carnage going on in the commercial real estate area. Nobody knows what the future of office buildings, retail, malls, all of these things, what that's going to be about. It appears every time we start to come out, we get some cases of COVID. They are quick to pull the trigger to lock us down. And I'm not sure where we go from here, and I don't know what's going to happen into those areas. So there's still pockets and potential for amazing amount of risk in the economy. So the analysis that I've done here and I do on the channel, we're highly looking at technicals and trying to apply the fundamental backstop and what's going on. And sometimes that's easier than others. It appears right now that that the markets are going to continue to have an underlying bullish bias for the moment, whether it's the Fed, whether it's expectations by market participants that things are just going to get better. Those are always hard to put any kind of number on them, but it appears that's what's going on from that standpoint. So anyway, I just saw somebody made a comment about the stream goes to lower quality when broadcast can't cope. I've got a monster pipe coming out of here, and I am getting a warning on my screen, and it just seems to do this. But I've tried to broadcast at a really high quality, and I should be able to do it. I got a half a gig in this thing, so it shouldn't be a problem, but it appears. And yeah, Vicky, we did do Tesla. I think it's around on the replay at around 45 minutes into the replay. If you skip around, you should be able to find that. Yeah, Sean, listen, we put an offer out there. It was kind of, if you folks sign up, if you're listening to this and you want to use a WaveTech tool, if you sign up right now, there is going to be an additional charge, but if you sign up, we'll get you the portfolio manager right now. So yeah, so go ahead and get signed up if you're thinking about doing that. And we're going to be doing some meetings. I'm not sure. This is a holiday weekend, but we did do a Saturday meeting, which was a lot of fun. We had a fair amount of people on that and a lot of interactivity that was really fun to do. And we're going to do Tuesdays at 4:30 Eastern time. We'll be doing training on there. If you want to know how to take a look, there is a video that briefly describes what we're doing. You can go to Kendall Report /WaveTech, and that's Wave TECH, and you can check it out there. And I think you'll find it. We're adding a lot of stuff. We're putting cryptos in. We're updating some of the software. We've got a project going on to get some of the real-time quotes operational in there. So anyway, engage with us. I think you'll find a really positive experience as we go forward. We've got quite a few fans on that platform already, and we're working on just gradually getting things better. I had to push things out. We were getting such a demand off the channel, and we went from basically 0 to 15,000 subscribers in 3 months, and it's still growing. And I want to be able to provide some process to you folks, be able to give you lots of details like what we do on these live streams, and there's a lot of things going on. We do have a trade station offering coming out. I'm working on TOS. I am going to be bringing in some friends of mine to the broadcast here sometime in the next 2 weeks that I think you folks will find very exciting, especially if you're an option trader. So there's a lot of things going on. Yeah, Andy's asking what's the difference between WaveTech and Portfolio Expert. WaveTech is a much more advanced management tool, and we are working on putting together a retail offering right now. So stay tuned on that, and there'll be videos on exactly what the contrast is between those. But one has the Portfolio Expert is a much more we'll just say much more sophisticated. Somebody asked if Snoznov's coming off. This is interesting. What used to be the VPM tool, Tom Snozoff was my very first customer, 1998. And I would just tell you that there is, with the person that is going, I'm hoping that we can work out something and work together on some stuff, is one of the original players in TOS, and is a brilliant option guy. Maybe he's even listening. But I'm hoping to get him on because there's some really cool strategies that we want to bring out. We're going to take WaveTech trades and wrap them with ideas and show folks how to do those things. So that'll be pretty exciting. And I hadn't talked to Tom. This is interesting. I hadn't talked to Tom in about 25 years actually, and I ran into him in Vegas last year. It was kind of interesting. I had to tweak his memory a little bit. Then he remembered all the stuff that we were doing for him back in the day. But they were him and Tony, and there was another guy, I can't remember his name, was one of our original customers, and we met them through my friend that I'm hoping to get on the channel. So anyway, yeah, and you have to understand, I'm an option trader. I don't focus on the options anymore at all. There's people I know that are doing amazing things. I have some other folks I want to bring in that are amazing stock pickers and screeners, and I've got a lot of interesting friends, and I plan on getting them in on this channel and bringing in some additional value as we go forward. So I'm working on a lot of stuff, so keep hanging around. We're in the beginnings of this channel. I really am anxious about the activity that we've had. I think we're going to be able to provide a lot to this community, both in tools, both in perspective and trading ideas and trading strategies and how to handle trades. Those are all things I want to get into. And we've been focused on just market performance, doing like we did today from the standpoint of here's what I think about a stock, random, but in the real scheme of things, there's so much more in value that I can help you folks with, from trading strategies to, like I said when we were just briefly talking about these stocks, I need to do a video just on how to handle a trade. If you're only trading a handful of stocks, how do you handle those trades, and where do you exit? What kind of strategies can you do? Because the goal number one is always to eliminate risk on every trade you go into. And now with fractional shares, you're going to be able to do some amazing strategies. It used to be, I always told you, make sure you trade in increments where you can sell out of partials and do different things. So there's going to be whole sessions eventually that what we're going to talk about, instead of doing what we're doing with these live streams now, where we do just a complete educational venue on these type of things. And I'm working on it. So just hang in there. I appreciate everybody that's a fan. We didn't have any super chat today, but that's okay. We're doing well. I appreciate everybody that watches and supports the channel. And Andy, yes, Portfolio Expert is better and is more expensive, but we're working on some stuff here to get this out to you. Yeah, somebody asked how much Wave Text per month. It's $97 a month, and it covers 16,600 symbols. But if you go to kendallreport.com/wavetech, there's a bunch of information there that you can watch. There's a video that I did just to explain what you're going to get briefly, so you can sign up pretty easily, and that's pretty much it. Yeah, so you can go in there and look. There's some videos that we've done. You'll see on the channel. Yesterday there was one where we're talking about the portfolio manager, but anything that says WaveTech training and Q&A, I think there's probably 4 of them out there now. You can go back and watch some of those previous broadcasts and get a feel for what the tool's doing. So that's much more in depth, and that's why we're broadcasting those out, to the internet. Yeah, and Andrea, you're right. I'm going to get this done. I've just, I've got a lot on my plate right now. There's been some very interesting developments that I'm working on. The channel coming alive like it has had given me an opportunity to meet a lot of new people, and that's been exciting. And a lot of people that have hung around me for years are also excited, and that's why I'm going to be able to bring in some really great content as we go forward. And I'm also learning how to do this. So I'm a new YouTuber. I've been on YouTube, but this channel and running the channel, there's a lot of things you need to know. And so I'm learning and in the process of getting people involved in the channel and with me to help this things out. So anyway, folks, I really appreciate everything. We're about 7 minutes past. I usually try to do an hour and a half. I'm going to stick through that today. And I appreciate everybody watching. And we'll do this again next week. There's a video coming out tonight. We'll see how this market closes up ahead of the numbers. I see the futures, the cash has ticked up to 31.22 again. I'm thinking that we could maybe get a surge up to this 31.31. We're getting really close to breaking this market out, and that's why I put out the video last night that showed these objectives. So if you just tuned in, when I get off of this channel and the rebroadcast comes up, just the first half hour, I went through a lot of detail, long-term, intermediate, and short-term ideas on the index, primarily in the S&P. Last week, we did get a chance to cover the NASDAQ and some other things, but pretty much went through a lot of individual stocks, which is what I wanted to do. So, folks, thanks for watching. We will see you next week, and watch the videos. Please subscribe to the channel, all of the above. Before you leave, smash that like button if you enjoyed this broadcast, and we will continue to bring lots of content to you folks. Thanks again.